Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark runs down the latest on the senior equity markets. Sprott Global President Rick Reaugh gazes into his crystal ball for the new year. Inside Track President Eric Hadik looks at how 2017 will play out according to various natural market cycles. We'll look at the closing numbers from the Canadian equity markets.
And we'll hear the latest on Company Showcase from Larry Reaugh, the CEO and President of American Manganese.
We'll talk to Ross Clark right after this.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to the show, Ross, and Merry Christmas.
And the best of the season to you and your family.
Are we going to have a golden finish to the year?
A golden finish. Well, precious metals have had a great start to the year, and percentage-wise, I was talking about how much these miners are up, but boy, it has been a tough stretch since the middle of the year. And ideally, when we take a look at it, it's very, very common for precious metals to bottom out in December and January. And in particular, when we look at the 8-year cycle we've talked about a number of weeks ago, we would expect to see a low ideally in January, February. And when we do some counts, when we take a look at the patterns here, with the strength we've had in the U.S. dollar and it breaking out, then we take a look back to how the gold market comes under pressure related to the strength in the dollar, and measure the size of the patterns that we've been in. And both the gold and the silver market have some just extremely interesting levels at this point that we're monitoring. If we look at the first decline that gold had from its high of the year down to the 1240 level, and then look at the bounce from there, it's very, very similar to what we've seen in a number of the times when the dollar had been strong and was breaking out. So the measurement would be that the 1240 is about halfway down as to what the eventual move should be in gold. The measurement then becomes 1105, maybe plus or minus $5. And other levels that we would look at, like a Fibonacci level for the move on the way down relative to the consolidation. There should be levels at the 38% level, also up at 76%. Those fit in perfectly. They're the same as we saw coming out of the 1990, going to the 1999 bottom, also into a 1982 and 1985 bottom. So the optimum is to say we're sitting reasonably close now. We've been into the 1120s on gold. We've got maybe $20, $25 left as far as that move is concerned.
How are the major equity markets holding up?
Exceptionally well. And in particular, the turn of the year trade that we like to take, buying small caps in the middle of December, hasn't really had the big pullback that you would hope for. But when we look at the historicals now to see what happens when you just get a small pullback right around the end of the year, as a matter of fact, the 22nd of December through the 30th, it only needs a small pullback in the small cap stocks, the Russell 2000, to then produce a nice move to the upside. And at the tail end of this week, we ended up with exactly that type of pattern happening. So we think that there's a pretty reasonable chance that you could still have the small cap strength carry in through the end of the year. If it does run well, then you probably want to bank some profits there. If it's slow and methodical next week, you probably want to let them run a little bit more into January.
Thanks a lot for chatting with us, Ross. Hope you and your family have a great Christmas. My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Rick Reaugh, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Rick Reaugh, President and CEO of Sprott U.S. Holdings Incorporated, on the web at sprottglobal.com. Rick is speaking to us from Carlsbad, California. Rick, welcome back to This Week in Money, and Merry Christmas.
Merry Christmas to you, and it's a pleasure to be back with you. Thank you.
Rick, let's take a quick look back at the 2016 resource market. Which resources were naughty and which ones were nice to us?
Well, I think from the beginning of the year to the end of the year, virtually all of them were nice. None were naughty. Some were, of course, nicer than others. Of particular interest probably to your subscribers was, at least in the first half of the year, the response that both gold and silver, and more importantly, gold and silver equities, enjoyed in the market. But the truth is that a broad range of commodities responded well over the course of a year, probably from overlooked levels in 2015. People are excited about the double-digit moves in gold and the triple-digit moves in the gold stock, forgetting that things like met coal actually were up by 300% in the course of the year. So I would suspect that all of the commodities complex performed well, albeit from grossly oversold levels.
Do the U.S. stock markets look like they're topping right now?
That's above my pay grade. I don't know. The truth is, whenever I get myself out of industries I know well, those industries being natural resources and sometimes financial services, I tend to make as many mistakes as other people, which is to say a lot. So I'll pass on that question.
Have we begun a new resource stock bull market, or are we close to the end of the one that began in 2001?
No, I absolutely think we're in the beginnings of a new bull market. People who haven't experienced as many bull markets as I and perhaps you have may fail to recognize the early stages of a bull market because the cyclical declines in secular bull markets are so ugly. It is not uncommon to see equity indexes fall by 50% in cyclical declines in a secular bull market. It doesn't feel like you're in a bull market when you experience that kind of cyclical decline. But the truth is that I think that with regards to precious metals in particular, we're in the early innings, perhaps the third inning of a 9-inning ball game. I think with regards to industrial materials, and by industrial materials I'm including energy, that we're probably in the first inning of a 9-inning game. It wouldn't surprise me, as an example, to see the base metals and the energy prices go lower for 2017 before the supply destruction that occurs as a consequence of low commodities prices kicks in and the bull market gets underway in earnest. But I think the bull market across the board in natural resources is already underway, however haltingly.
Looking ahead to the new year, do you think Donald Trump will be good for mining and resource stocks?
No, I think he's a non-entity in almost every regard. He will probably be good for the domestic. By domestic now I mean U.S., not Canadian. Coal industry, I could see him going some ways to lessening the regulatory burden on the domestic oil and gas industry. And I could even see him benefiting the Canadian oil and gas industry in the sense that he might be able to help with pipeline transmission of Canadian hydrocarbons out of Canada into the U.S. Gulf Coast.
Carl Icahn has just been appointed as the head of deregulation in the U.S. Is that a good appointment?
I think it's a very good appointment. By the way, don't mistake me for a Trump supporter. I think the fact that the United States could stump up Trump versus Clinton as the best out of 310 million is absolutely shameful. But a couple of the Trump appointments, I think, are intelligent, away from the Washington elite. I think Carl Icahn, well, among other things, unlike most government people, this guy's actually had a job in his life. He's made payrolls and things like that. I think Icahn is probably a superb appointment. I look forward to him weighing in as an example on some of the idiocy that infects the SEC and inhibits capital formation both in the United States and Canada. I also think that Rex Tillerson, the ex-CEO of Exxon, is an absolutely inspired choice for the State Department. It actually raised my very low opinion of Trump, not to the point where I like him, but to the point where I think maybe he accidentally made the right choice.
Accidentally. Well, it seems to me that he has surrounded himself with some very smart people, and I've been told that's pretty well his way of doing business. Is he may not know a lot about a certain thing, so he hires people who do.
Your lips to God's ear. His campaign rhetoric was so personally offensive to me that I found it hard to envision him as a leader, and I would absolutely love to be wrong.
Do you think the Trump administration will shine a light on commodity market rigging?
I do not. I think that, frankly, rigging is endemic in all financial markets. I remember my upbringing on the Vancouver Stock Exchange and the fairly frequent attempts that took place to rig there, and the much more successful rigging in larger markets. But I also think that rigging is a very common way for the natural resource industry to excuse its own faults and blame them on alleged sinister forces.
With real estate markets turning down in specific areas, I'm thinking Vancouver and New York, do you think more capital will be attracted to the venture markets?
I don't. I think that the overblown nature of real estate pricing in Vancouver and New York relative to affordability is the same sort of bubble mentality that occasionally impacts the junior resource industry. The mining business will begin to attract capital on more favorable terms when it becomes a more effective wealth creation mechanism. The truth is, if you look at the global mining business year in, year out over the last 30 years, it's been an extremely efficient way to destroy, not add capital. And until the participants, both by way of issuers and the investment bankers, find a way to deliver better value for the investors, it will be an inefficient market to both deploy and raise capital in. It's been very good for me, but it hasn't been good on aggregate for the people who participate in it as investors.
What do you see ahead for gold?
I'm a gold bug. I'm relatively persuaded that 2017 doesn't have to be a stellar year for gold, because I think that overall confidence in the financial system will be fairly strong in 2017. I note also that although the Fed funds rate in the United States increased by only 25 basis points, the paid yield on the U.S. 10-year Treasury has increased from 1.4 to 2.4%. In other words, 100 basis points. When the U.S. 10-year Treasury is relatively more attractive, gold is relatively less attractive. So until some point in time comes that the yield on the U.S. 10-year Treasury is more dependent on people's fear of the instrument, the rise in the gold price will be muted. But the truth is that the narrative that surrounds all this, that is the near-term perspective in the market, isn't taking into account on-balance sheet obligations in the United States of $20 trillion or off-balance sheet obligations of $100 trillion. And the improbability that those obligations will be able to be met almost irrespective of the interest coupon without deteriorating the net present value of those obligations, which is another way of saying without devaluing the U.S. dollar.
Is that possible?
I think so. I think if you, well, I mean, let me rephrase that. Is it possible to honor the obligation without devaluing the dollar? That would require people to be honest. It would require the U.S. to say to people who had bought the bonds, yes, I realize we owe you $20 trillion, but we're only going to pay you 14. In other words, some form of default. It would also involve restructuring the off-balance sheet liabilities, things like Social Security, Medicare, Medicaid. In my experience, 63 years on Earth, waiting for politicians to be honest with the populace or waiting for the populace to tolerate honest politicians is a non-starter. So my own suspicion is that, in fact, we will find a way, as we did in the 1970s, to depreciate the value of the dollar and so depreciate the net present value of the obligations, which would be very good for gold, of course.
Well, back in the 70s, we did see rampant inflation with interest rates, gold and silver all moving higher. Are we in a similar cycle heading into the new year?
I don't think so yet. I think that 2017, I'm relatively persuaded that some exogenous shock, some black swan, that the up move in the gold price will be somewhat less precipitous, at least in the first 6 months, than it was in the first 6 months of 2016. There is lots of things that could go wrong with perception, in which case lots of things that could go right for gold. But in the circumstance that that's in front of us right now, that is relative complacency in capital markets. If you look as an example in the volatility index, it barely has a pulse. If you look at confidence in the U.S. dollar, which seems set to increase, frankly, as a consequence of stresses in the Eurozone, and as projections that as many as 1 or 1.5 trillion euros move out of Europe and come to the United States, it looks to me like the market for the U.S. dollar and the U.S. 10-year Treasury will be relatively strong in 2017, which wouldn't be particularly good for gold. Now, I'm by nature stressing the short-term nature of the weakness. Looking in the 2018-2019 time frame, I think the reality of the U.S. fiscal situation catches up with the U.S. 10-year Treasury, and I think that's very good for gold. I think your listeners should also pay attention to the fact that gold has been priced, since it's priced on a global basis in U.S. dollars, it's been priced mostly inversely to the real yield on the U.S. 10-year Treasury, that is, the yield after inflation. The U.S. 10-year Treasury itself has been in a bull market since 1982, when it paid well over 15%. The bottom, at least in recent history, was last year when it paid 1.4%. The point I'm trying to make is that if you understand that gold trades inversely to the U.S. 10-year Treasury, and you observe that the U.S. 10-year Treasury has been in a 35-year bull market, and as a consequence of that is closer to the end of that bull market than the beginning of that bull market, then you believe that gold inversely is closer to the beginning of its bull market than the end of its bull market. That was a very wordy way of saying that I again believe that we are in the early innings of a 9-inning ball game with regards to the gold bull market.
Gold or silver, which one do you think will get better returns in 2017 and why?
I don't know the answer to that. I own more physical gold because I personally own gold as an insurance policy. Silver has always been the poor man's gold, and mercifully I'm no longer poor, but the unit cost of purchasing silver is less than the unit cost of purchasing gold, and silver has always been more volatile, both to the upside and the downside to gold. I suspect that when the bull market gets underway in earnest, that silver holders will enjoy better speculative gains than gold holders, and silver equity holders will likely enjoy the best gains in the sector. But that assumes that past is prologue.
Is green energy likely to be favored over uranium in 2017?
I don't believe so. Investors have a hard time with green energy because of the very long lead times associated with turning capital expenditures into free cash. Uranium, by contrast, I think if we get any hint of recovery in the uranium price, uranium equity prices are poised to do relatively well in 2017 on any increase in the uranium price. I'm not sure the companies are prepared to do very well given the price of the commodity, but I think the expectation on the part of speculators is that the uranium equities are poised to go much higher. I would point out also for investors who have the patience to be involved in green energy that I don't think they will be decapitalized by the Trump administration. I think the Trump administration is highly clientelist, and I think that there is a lot of economic interest in continuing to subsidize both wind and solar at the ratepayer and on a sort of a tax-adjusted basis.
Trump just tweeted the U.S. must greatly strengthen nuclear capacity. Is that good news for uranium?
Oh, I mean, in terms of the acceptance of the rhetoric, yes. But I don't think it'll do anything to the uranium price. Understand that politicians, and Trump is a consummate politician, are lying when their lips are moving. His lips move on Twitter. What matters to the uranium price is the restart of the Japanese nuclear fleet. There are 24 reactors that are currently shut down that are in the permitting process for restart. These aren't plants that have to be permitted, which can take 10 years, or financed or constructed, which takes 5 years in addition. These are plants where they flip a switch and begin to consume nuclear fuel. What matters is Japanese restarts.
Trump says he'll rebuild infrastructure in America. Is this bullish for base metals?
Once again, I think you're asking me to ascribe value to a narrative. The country, meaning the United States, I realize I'm speaking to a Canadian audience, the United States will have a $1.2 trillion deficit next year without Mr. Trump's infrastructure spending. I would ask where the country is going to get the money to spend $1.5 trillion. It might be that the narrative excites speculators enough that there's a recovery in base metal stocks or in industrial material stocks. But the reality, let me put it differently, politicians tell the truth by accident. The fact that Trump says he's going to do something or cause something to occur is more something of interest and conjecture than it is a reality to be invested in.
Is it possible to rule a country by sending out tweets? He's yet to hold formal news conferences.
Well, I guess he has found that tweets, and by the way, I'm not, in this sense, differentiating him from Clinton or Trudeau. I hold all politicians in the same low regard, but I suspect that he finds tweets a more efficient way of disseminating disinformation.
Are lithium and marijuana stocks likely to continue their bull markets in the new year?
I think in the very near term, yes. The truth is that the world doesn't have a shortage of lithium. The world is well supplied with lithium, but in the very near term, there are processing shortfalls. I think marijuana is probably a more interesting circumstance in that it's a nascent market and it's a very large market. I've joked for years that the transition of Vancouver-based public companies from mining to marijuana is probably useful. Many of the promoters go from being involved in an economic enterprise, mining, which they know nothing about, into an enterprise like marijuana where they have 20 or 30 years of experience. And I'm only partly joking there. It's a really nascent industry with lots of room for innovation and leadership, in that sense very different than mining.
Is the Trudeau government a friend of the resource sector?
No. I don't think you can find any way to say that the Trudeau government is a friend of a resource sector. I'm always proud when my sector isn't the, quote, beneficiary of government largesse, because if we were the beneficiaries of government largesse, it would mean that we're stealing. And while we do attempt to steal in the mining business, we're refreshingly inept at it.
What do you see ahead for oil and natural gas?
Lower first, then higher. The current strength in oil and gas would appear to me to be centered on the fact that there's an agreement by OPEC to limit production. I think that's purely political posturing. I see the very constrained global economic growth limiting demand at the same time that I see a fight for market share among others, Saudi Arabia, Iran, Iraq, Russia, and maybe next year, Libya. I see too much production trying to crowd into a constrained market. And in my experience, conspirators, and certainly OPEC is a conspiracy, albeit a deliberate and disclosed conspiracy, my experience has been that conspirators usually end up conspiring against each other. I'm a great believer in the fact that markets work more than politics. And the oil market is, I think, for the next 18 months, oversupplied. Now, the truth is, if you're willing to allow yourself a little bit longer time frame, a 3-year time frame, a 4-year time frame, or better yet, a 5-year time frame, then energy prices are certainly higher. Exxon, who I think knows something about energy, has suggested that the total cost of producing a barrel of oil, including cost of capital and indirect costs like social costs, exceeds $60 a barrel. So on a global basis, we're making the stuff for $60 and we're selling it for $50. We're losing $10 a day and trying to make it up on volume. But if you lose $10 a day times 98 million barrels, you're losing almost $1 billion a day. Pretty soon, or at least over time, that takes a toll. And so I think you're looking at some point in time at incentive prices higher than $60 a barrel. So the price must rise over time, but it doesn't have to rise in 2017.
Do you believe that water will be more of a commodity more than ever in the new year?
It depends on where. Of course, your challenge in BC with water is to make it go away. But in places like California and Texas, yes, absolutely. I think we're headed for a crisis in water distribution in these places because the supply of water isn't allocated by the market, it's allocated by politics. And politics only responds to crises.
Is there any way for Canada to change its rule about exporting raw water exports?
You know, I brought that up once on BNN, and I was very lucky to escape Toronto without being lynched. So I think I'll pass on that topic for now. You know, Americans right now are probably not very well advised on telling other people about how their politics should go.
And, of course, you take a look at Las Vegas. I can't think of any community that wastes more water than they do.
You know, what you need to do is have rational pricing with water. If water was allocated to the market, in a market, you wouldn't have a water shortage. You'd just have very different uses. We waste water in numerous ways. Here in California, we grow rice in a desert. How smart is that? We use almost 2 million acre-feet of water a year in the Imperial Valley of California, much of which goes to grow hay, to ship in containers to China to subsidize their dairy industry. It's truly bizarre. That's what happens when when scarce goods are allocated by politics rather than by a market.
Any words of wisdom for 2017?
Be patient. I think that's what it's going to take. What we're going to do in 2017 is allocate money to sectors and places that we think are out of favor that will return to their mean in the 2 or 3 year time frame. We're going to be competing with people who have trauma holding stock over a long weekend in favor of payoffs that happen in a more sure fashion but over a longer period of time. And also, I think constrain your efforts to the best deposits and the very best people. I recognize now, having been in the business for 40 years, if I had worked less hard, done fewer deals, invested less frequently, but invested in every case with the best people, that ironically, by working less hard, I would have made more money.
Rick, how can people find out more about Sprott Global?
I think the best way is to visit our website, particularly if you're interested in extractive industry investments. There is over 200 hours of instructional material on our website. You can get to it by going to www.sprottglobal.com. When you're there, subscribe to Sprott's Thoughts, the internal blog from the Sprott's group. I guarantee your listeners will get their money's worth because that product is absolutely free.
Rick, all the best of the season to you and your family.
Thank you, sir. It's been a pleasure. I look forward to round 2 next year.
My guest has been Rick Reaugh, President and CEO of Sprott U.S. Holdings, Inc. He was speaking to us from Carlsbad, California. Coming up, Eric Hadik, next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Eric Hadik, President of InsideTrack.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim. Great to be here.
China's economy, can we trust the numbers coming out of there?
You know, I don't consider myself a China expert, but the charts as far as the indices, the Shanghai and Shenzhen indices, still look like something that has another shoe to drop. Between June of 2015 and January, February of 2016, Shanghai lost almost 50% of its value, fulfilling a lot of crash cycles that I was looking for in that portion of these overall cycles. But I am looking for 2017 to be the time when we see another downturn in global equities, not just China, but around the globe.
And do we have any idea when that drop will start or how big?
Well, I have been talking about a combination of cycles, some very large scale and longer term. Really the biggest that I've been watching is a 40-year cycle that we've discussed numerous times before, but as it's applicable to equity markets, I was looking for a topping process to start to unfold in 2015, 2016, and then it to turn more decisively down in 2017 when some other cycles that I watch. One of the more intriguing cycles that I have discussed with regard to stock markets for the last over a decade now is an uncanny 17-year cycle that has, back in 2007, I wrote a series of articles about this when the 17-year cycle was calling for a 1 to 3 year drop of 35 to 50%. And in 2007, it was tied to market moves and turning points in 1990 and 1973 and 1956 and 1939. But there's an overlapping 17-year cycle that spanned the bull market from late 1982 to late 1999, early 2000. And then that low to high cycle usually projects a subsequent high, so a high to high following that sequence. So from the peak in early 2000, a subsequent peak is expected in early 2017, and there's a lot more to it than just that. But when you're looking at that individual cycle, that's what that is portending. And then a 1 to 2 year bearish period coming off of that. But it's really the synergy and the combination of a lot of different cycles that I look at. I never rely on just one single one. I need to see synergy and how these cycles interplay, and that's really where the more convincing analysis is coming, looking at early 2017 to early 2018 as being a more definitively bearish period based on a lot of not just cycles but timing indicators I use, and even some potential fundamentals that I see on the horizon.
For people who believe that the U.S. Fed or other bodies control things like equity markets, is that really true, or are they just going to follow these natural cycles?
I think it's a combination of both, that you will see the cycles definitely being the prevalent force, but the extent of how sharp or not sharp the moves are in the market can certainly be influenced by some of that manipulation or whatever you want to call it. And even when you look at varied indices, you can see that one of the indices that I follow pretty closely, because it's not discussed as much, is the NYSE, New York Stock Exchange Index, which incorporates over 2,000 stocks. So, in my opinion, gives a better overall perspective of what's going on. And that index peaked in May and June of 2015. It went through the bearish period that I was looking for from late April through late September of 2015. That was also tied to the 17-year cycle. If you go back and look at what happened in 1998 and even 1981, it was almost the same type of sequence where you saw a sharp 20% or so drop in that middle third of the year. Happened in 1998, happened in 2015 on a precise 17-year cycle basis. And then, just as in 1998, the 17-year cycle pushed indices back towards their highs, and the NYSE has just gotten back to that previous peak, and for all intents and purposes is setting what could turn out to be a double top. And there's other indices out there that are showing lower highs, even though you'd never know it from the headlines and the Dow Industrials, which is always notoriously way out in front on the upside.
Has too much attention been paid to the Dow?
You know, I think you'd have to put that question into context. If depending on what you are looking at, probably, and that's why I try to take a more comprehensive view of the markets, and also looking at, like I mentioned earlier, the global indices. When I was discussing European indices in early 2015, and I did this series of articles that I titled Last Man Standing, and everything was pointing to the German DAX, which had been the strongest of the European indices at that point in time. Everything was forecasting a multi-year peak in the second quarter of 2015, and the price objectives were laid out, and the DAX topped in pretty close lockstep with that analysis. And even now, as it's rebounding, is rebounding to lower highs. And the reason I mention those other indices is not because they necessarily refute what something like the Dow is showing, but they often give some of those early yellow flags or early warning signals when a new bout of trouble is developing. And so the the declines in the Dow Industrials might not be as deep as many others, but if you look at even key stocks within the different indices, like even what Apple went through last year and the extent of its rebound this year, shows you a much different picture. And there are some of those, what I just call proxy stocks, that I also watch very closely to see if they're corroborating what the Dow Industrials is showing, or if they're also diverging and showing some early signs of trouble. And when I'm looking at this, the big picture, I am talking about something, a generational cycle that, as I mentioned, is going through a multi-year topping process now, and I don't think it will see its bottom and an upturn until somewhere around 2022, which is also linked to critical lows and the start of bull markets in 1982, 1942, on that 40-year cycle. But in between now and then, you'll obviously need other cycles and other indicators that are going to hone that down and give you more specifics to work with. And that's why I am looking at a lot of these other proxy stocks and global indices to see the canary in the coal mine.
Right. And how healthy is this canary right now?
Well, there again, you do have to break it down. Obviously, U.S. indices and the U.S. economy has been in better shape than a lot of the others. And for the last couple years in particular, Europe has certainly been struggling. And the more you hear and read about the banking woes throughout Europe, it's just incredible the level of non-performing loans that many of the banks have, whether you're looking at Italy, Spain, Portugal to a lesser degree, and Germany. And, you know, are they going to be able to bail out every one of those, or is one of those going to break free and trigger a little bit of a snowball effect before they can run around and stick the proverbial finger in the dike of several holes in that leaking dam?
Italy has just announced a 20 billion euro bank bailout plan. Some of their major banks say they are running out of cash. I guess customers are running the banks because they're scared of what they call the Cyprus haircut.
Well, yeah, and that's the thing, is for years, all of your Italian savers, all of your, middle class, the average working people, were told, put your money in the banks. That's the best place. That's the most secure. And as you put it, now with the banking regulations and the stipulations for bailouts, it's got to be a bail-in first. That's going to hit a lot of the average individuals throughout Italy. And again, they're looking at similar things, maybe not quite as extreme yet in Spain. And at what point do you hit a tipping point where it's just too many of them to run around and try to bail out? Or it doesn't even have to be that any one of those goes bankrupt or anything. All it needs to be is that investors get their confidence shaken enough that they start pulling out of those bank stocks. And although if you look at the stocks European 600 bank index, that thing has been decimated just since last year and over a 2 to 3 year period. So it's to one of those points where it's just going to take one more dip when it hits that point of no return where investors just get completely spooked, and then it becomes more of a self-fulfilling prophecy.
Eric, what kind of an outlook do you have on your gold index?
Gold has really adhered to what we've discussed for the last 12 to 15 months, and that also looking at a multi-year perspective and a multi-year outlook. What my work was showing in late 2015 really hasn't changed, and that was that we would see a major multi-year bottom in late 2015, that we would see about a 6-month advance in 2016, and then a sharp drop to a secondary low in the very end, leading into the very end of 2016. So here we are. Gold bottomed in December of 2015, rallied into early July, and has since pulled back to really a retracement level that, to me, is a textbook second wave pullback target. I described that in different publications, but I've just reiterated and reviewed that analysis in a couple of my latest weekly relays. But it's a price support level that, when a market is tracing out a longer time frame, larger degree bottom, it will retrace a large percentage of its initial advance. That initial advance is the one that does tell you that a bottom is intact and that the tide is in the process of turning, but then you need to see a pretty solid correction to really show that it is a healthy trend forming. That if it just went straight up, that would be more of a knee-jerk reaction type of rally, and usually those are not sustainable. This is something where you see a pretty solid advance, one that was bigger than any previous advances of the last 3 to 4 years, and that kind of ties into the foreshadow signal that I described back in late 2015 and early 2016. That was fulfilled with gold's rally into mid-year, and then once that is fulfilled, it usually signals the top of the first wave, the initial advance, and then you get this solid, pretty substantial correction, which we've seen in gold. And so now gold is attacking those support zones, and we're now a year from the previous low, which, if you look back over the last 5 years, 4 of the last 5 have seen intra-year lows set at the very end of the year. And so even from a cyclic basis, this was the focus. So it's all kind of setting up nicely for that secondary bottom, but even that does not immediately lead to a skyrocketing market in most cases.
Eric, have the best holiday ever.
You do the same, Jim.
My guest has been Eric Hadik, President and CEO of InsideTrack.com. Coming up, we'll have the closing numbers from the Canadian equity markets next on This Week in Money.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. Here's the Canadian Stock Exchange numbers. The Toronto Stock Exchange high for the week, 15,363.37. The low for the week, 15,254.01. It closed at 15,328.15, up 75.95 for the week. On the Toronto Venture Exchange, The high for the week was 732.73. The low, 710.92. It closed at 728.13, off 7.09 for the week. The Canadian Securities Exchange, high for the week, 785.98. The low, 756.75. It closed at 773.21. It was off 10.50 for the week. And that wraps up our show for this week. We'd like to thank our guests Ross Clark, Rick Reaugh, and Eric Hadik, and thank you for listening.
Please stand by for Company Showcase with Larry Reaugh, the CEO and President of American Manganese.
You can email us at info@howstreet.com. I'm Jim Goddard. Happy holidays, everyone. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're speaking with Larry Reaugh, CEO and President of American Manganese. Best of the season, Larry?
Well, the best of the season to you, Jim, and your family. It's not going to be a white Christmas, but we've had that already.
In Burnaby, it will be white. We still have 1.5 feet of snow. It depends where you are. We're speaking on December 22nd. Larry, can you maybe tell us about the big year that American Manganese has had?
Well, that's first off, Jim, I'd just like to say a very Merry Christmas and a happy and prosperous New Year to my shareholders and anybody else that may be listening out there. And yes, this has been a great year for American Manganese. We really kicked things off in August when we started getting results back from Cametco. And you stop and you think about it, here we are, we're talking about recycling, and that was all it was, talk, until we got the proof of concept underway. We've been talking about recycling for over a year now. And but it really didn't kick off until August. And what happened then is since then we've had a market cap as high as $50 million. And we're currently still at around $31 million. And that was at the beginning of the year, our market cap was really, it was just a little over $1 million. And on August the 8th, it was just a little over $3 million. So that's a great achievement. Certainly a lot of shareholders are up a lot of money. Some are probably down right now, but they can be comfortable with the fact that we achieved our goals. And there's been companies out there that have been working on the hydrometallurgical process for recycling batteries, lithium-ion batteries, for a number of years, and have never reached the stage of development that we're at. So when you stop and you look at the year in respect to how the company has advanced. And let's talk about the actual physical advancements. First off, we got great results on the leaching, 100% recovery. We've got more recycling to do on the precipitation, but we did get close to 100% of the cobalt and 60% of the lithium, which is enough for us to actually produce a powder and make lithium-ion rechargeable batteries, button cells, which we've done, and that's been successful. And we've filed for patents, so, that's in a very short period of time. What else has the company accomplished? Well, certainly its technology has attracted the right kind of people. We've set up an advisory board, and we've got some stellar people on that advisory board. And we certainly have probably the most outstanding achiever in this field is just appointed, Shailesh Urepti. And Shailesh has just received a $500,000 award, which was highly competitive in New York. He's got patents that have been commercialized. He's familiar with actually commercializing these things. He's familiar with institutions that finance these things. It's just been he's going to be a fantastic addition and bring a lot of value to the board of the company. And that's in a nutshell. That basically tells you that the company is on the right track. Two, we'll come to the attention of other people. You know, for example, there's a lot of talk about taking these spent batteries and making wall power units to store energy from solar. And you got to remember that's a 70% spent battery that's going on the wall. And certainly Tesla has came out against that idea. They say it's not economic and it doesn't make sense. And it doesn't. It just, just moves out the actual recycling to a future date. And there's been some articles on that, and I'll be addressing those in the new year. So it's been fantastic, Jim.
What's happening on the big board with Amy?
Well, you probably mean the bull boards. We certainly have our supporters out there, but we have what I call the people that don't own shares or the predator traders that are trying to bash the stock down. As a matter of fact, somebody posted recently that there are paid bashers out there, and they get bonuses if they can drive the price down. And but that said and done, we've been looking at some of the postings, and some of them are getting pretty personal and pretty, basically calling the management and the directors of the company crooks, and that we're manipulating the market. By the way, manipulating it down, which doesn't make any sense. And so what I've done is I've got a law firm in there going through these postings. And if we see something that really we feel is going over the top on the bashing, where it gets into the criminal area, we will be prosecuting those bashers. And, we've had lots of defenders on the bull boards, but, the company's got to stand up for itself, too. We got to show that we got nothing to hide, and that these bashers can't get away with that. And I would do a couple of things for me. It would identify the bashers, and it may lead me back to who the major predator traders are in our stock. We've had that for quite some time, and as you noticed in the last couple of weeks, the big houses like TD and today's CIBC, and it's always a big bank that is selling off large blocks of stock. And we know that just about any shareholder out there that's got over 500,000 shares, and we know they're not sellers, so where's this stock coming from? And but the predators go through the big banks. You don't see much out of Anonymous and Jitney like you used to, because that really just tips the hand. They want to make it look like big banks are shorting us, but really it's just Jitney through the big banks. And so, we have a wonderful product. We significantly de-risked that product. And now we are going to move on to tightening up our patents and doing the chemistry on other battery chemistries, and because they're going to be included in our patent application. And we'll be looking for a partner. We just got back from the BATNat conference about 3 weeks ago, and I'm already getting a little bit of feedback from there. And it's all positive. So these are the sorts of things that we want to move ahead with. And I really think that this 2017 is going to be a banner year for the company.
Larry, do you think it helps that the latest Gallup poll shows in the U.S. that American confidence in the economy has never been higher? Does that help your business?
Well, that would certainly help my business. I think we're getting into more sophisticated investors as we move through. And not to say that our other investors are not sophisticated. I'm saying that these people are people that usually don't buy on a penny stock. And I think that next year will be that will increase significantly, and that poses a huge risk for these large shorts that I know are out there against us. And and I think we just have to steer the course. Our job in here is to basically make sure the company follows through on what it says it's going to do. And that's what we do in here. And, we'll keep that course going. I know we've been getting a lot of bashing on the bull boards from the sale of shares by a couple of directors, and which amounted to about 700,000 shares. And nobody said anything about the fact that the major seller had exercised his warrants, bought back 450,000 shares. And I'd just like to say that these people, and especially the one that sold the 500,000, hasn't seen a nickel from this company, although he comes in here every day and works a few hours every day for nothing. And so he's got to pay his bills too. And it's just I'll give you an example. I had to sell 5,000 shares yesterday. The reason why I said had to is because it's in my RRSP, and I have to take a minimum amount of cash out, which is just a little over $1,000 every year by law. So I can't take it. I can't put the money in and take it out. I have to actually take it from that particular RRSP, and that RRSP has 1 million shares of Amy in it. So that's the only place I can get the money to do that. But I guess the predator traders will have a field day with that. But I just wanted to mention that, Jim. And I just want to say to you and to Tom and everybody else that's assisted me on these podcasts that you guys have a very Merry Christmas and a Happy New Year.
Larry, you too. And just before we go, can you again remind people where American Manganese trades and what its stock symbol is?
American Manganese trades on the TSX Venture Exchange under the symbol AMY, and it trades on the pink sheets in the U.S. under the symbol AMYZF, and it trades in Frankfurt under the symbol 2AM. You can get all the information that's out there on our website at www.americanmanganeseinc.com. And if you want to get in contact with me, my email address is LREAUGH@AMYMN.com. And our phone number here is 778-574-4444.
Larry, best of the season again.
Thank you, Jim, and again, best of the season to you.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.